Hello, and welcome to this segment of IPPFA TV. My name is James McNamee, and I'm the president of the Illinois Public Pension Fund Association. And today we have with us Joel Babbitt. Joel Babbitt runs the NPPFA Benefit Program. It's a national platform for supplemental retirement benefits that was put together many years ago. And its initial start was with IPPFA. So, Joel, welcome to this segment of IPPFA TV. Give us a little background on your start and how you came about, and then we can segue into what you did.
Great. Well, thank you, Jim. Wonderful to be here. So I started my career out as a kitchen table life insurance person with Northwestern Mutual Life back in 1987. I'm just dating myself now. But basically, in the agency I was at, I filled the role as the disability specialist. And so what ended up happening was we were, through the knowledge of functioning as the disability specialist, we ended up getting into the public sector because in 1991, I was asked to attend a meeting that happened to be the city of Chicago. And they were looking for a state-of-the-art disability plan. It took 3 years, but we got it done. And we implemented it with the city of Chicago, the Chicago Board of Ed, Chicago Park District, 250,000 teachers in Florida. And from that experience, started doing more public sector. And that's how we sort of got going with it.
Well, as you know, IPPFA was looking many years ago, to take more control over the retirement futures, not just the defined benefit side, but the defined contribution side, because of our experience of what we saw in the marketplace with defined contribution plans not really filling the needs. Some of them were just completely overcharging participants in our minds. And we felt, what's more appropriate for an organization that deals with retirement, but covering both sides of the playing field, covering both the defined benefit side and the defined contribution side. So I know we looked out and we're looking for somebody, and along came you.
And it was actually a mutual friend of ours, the gentleman by the name of Don Hook, who happened to work for one of the defined contribution vendors, made the introduction because we were doing benefit work at the time, and frankly helping him work on the defined contribution side in states that had authorized the dissolving of the pensions. There were 14 states that had passed legislation that defined benefit plans for safety can be converted to defined contribution plans. And they needed a solution, a disability solution. And that's frankly how I met Don.
Yeah, and that was back during the go-go days where everybody thought, hey, defined contribution, everybody's going to be a millionaire. There's no down markets. It was all irrational and completely ridiculous. And in our minds, we were like, you guys, this is dangerous going down this road, replacing defined benefit plans completely with defined contribution. And then, of course, a lot of the DC companies lobbying very heavily to get rid of the defined benefit plans because they wanted the money. And I get it. So when we sat down with you, and I remember this conversation very clearly, Don Hook brought us together. We sat down and we said, this is what IPPFA is looking to create. And we were looking to create a plan that was low cost, good service, that would fit the needs of our participants, and was not going to attempt to have this backdoor stuff going on to try to undermine the defined benefit plans. And that's how you came across it.
Yeah, and so our first big conversation on that was in 1999, when you said, build me a deferred comp plan. And after I jokingly said, what's that? And we had a lengthy conversation about the structure and how you wanted it done. It frankly took about a year and a half, almost 2 years to put it together.
Yeah, it was a lot of work. I remember that. And there was a lot of input and plan design and getting it out there and trying to, pushing it out there to the membership and to the cities who are the fiduciaries on the DC side. And they have to assume the plan and they assume the fiduciary liability on that. But we did get that out there, and it was a lot of fun for the both of us. Yeah. I mean, you had an interesting background. I mean, one of your clients was SAG-AFTRA?
Screen Actors Guild, Federation of Television Radio Artists.
Yeah, so you had some interesting people that you had to work with, and the force was with you. I think you worked with Mark Hamill and others, and that was kind of fun. But developing this program as we started it, and it originally was called just IPPFA Benefits. Let me correct that. But as it was growing and growing, there were people who were in IPPFA benefit program who left the state of Illinois. and they went to other states. And why don't you tell us a little bit of what happened in that experience?
Yeah, so we had participants that would retire, usually a police chief or a fire chief or someone after 25 or 27 years in a department would move on to another state, and they wanted to bring the program with them. And so we would be in states, and we would, in expanding out of states, out of the state of Illinois, they were very interested in offering the deferred comp plan that we started in 2001. We added retirement healthcare funding in 2004, and they loved the programs and loved what we had put together, and they wanted to offer it locally in their new community. And so we expanded the program from the IPPFA to NPPFA Benefits.
And hence it's now NPPFA Benefits with a national platform that's growing quite fast. And it went beyond, though, just the 457, the 403B, and the 401A platform.
Right.
It also has a 115 trust. And why was that developed? What was the goal there?
Well, the goal was, frankly, it was at your direction. You, as a police officer at the time, were looking at the retirement healthcare costs and what the premiums that your stakeholders were incurring. And we were familiar with a mechanism that would allow someone to accumulate wealth over their lifetime completely tax exempt. It goes in tax-free, it grows tax-free, and then it comes out tax-free. And it's invested in their deferred comp platform. It's a portfolio of funds. And so we started that process back in mid to late 2003. And by 2004, we actually had a program put together that we were implementing. Our first client was Berwyn Fire, the city of Berwyn Fire Union. And they were doing a simply 2.5% of their pay. And then from there, we built the infrastructure to also adjudicate the claims. And so since 2004, we've got over 200 plans, and we adjudicate probably 8,000 to 9,000 claims a month inside of our office in Glenview.
Well, that's excellent. And, as you know, I mean, I push for that issue very strongly because our members, when they retire, they've got those gap years before they're covered by, Medicare. So they have to come up with a lot of money. But even when you're covered by Medicare, you still have a lot of out-of-pocket expense. That's the one area of retirement that most of our members just don't grasp how expensive it is.
Correct.
And how expensive medical insurance and medical costs are. It's when they think about their mortgage, well, this is a fixed expense. I know I'm paying, let's say $1,600 a month towards my mortgage or whatever, right? Well, medical insurance could be much more than that. Medical expenses can be much more than that. And that was why I know when we reached out to you and we created the program, it was such a success. It was hitting it out of the park. And it was one of those issues that, again, most people don't realize are put onto the front burner until they're close to retirement, which is a shame because it needs to be done early on. All of these programs actually need to be done as soon as you can do them, as soon as you're starting your employment. These things are so important. So what was another issue that you noticed when you were doing the DC program with participants that you felt needed to be addressed really well?
Yeah, so there was a bunch of stuff that we saw. A couple of them were that on the vendor community side, on the vendor side, that the vendor community had different pricing based on different communities. And there was really no ownership being taken on behalf of the municipalities because they just didn't even know that they had a vendor that the neighboring community was paying less for the same fund. And the other piece that we were really focused on was making sure that our stakeholders, a participant, could get advice and guidance, could make a phone call and get a call timely returned. The other piece was having a managed account that was built into the program. It's frankly something your board paid for. It was built into the cost of the plan, and that a participant they know, and our language has been always pretty consistent about that you do what you do as a police officer, firefighter, administrator, a teacher. We do what we do. And if you're not going to spend an hour a month looking at your portfolio to understand how much international versus small cap growth you should own, you need a system to manage the money. And a big piece of it was getting that piece put together to offer a managed account, loans that we credit 100% of the interest back to. In 2011, we added this thing called in-plan Roth conversions, which is a really cool thing that you can take your money pre-tax, convert it to Roth after tax within your account. And in Illinois, Mississippi, Pennsylvania, Iowa, and Michigan, you don't pay state income tax on that transaction. And so it's really guiding people, giving them opportunities to understand what the options are, and then just letting whatever transpire.
Now, I've noticed within a lot of these platforms out there that have now gone a lot of them. We're going to go low cost. It's going to be but there's no service. It's absolutely, you can't even get a body anymore, right, and stuff like that. Have you found that to be when you're out there, to be a big problem for those people who seem to be stuck in those plans?
Yeah, it's self-service, like cutting your own hair, just doing your own dental work. It's a bad idea, has been our experience, because you typically, there's a movement in the industry to offer super low cost and no touch, no service. And one of the beauties about what we put together was you've got a full service model that gives advice and guidance. You've got someone you can talk to all the time. And then you've got the self-service portal, which gives you city of Chicago pricing. And so you could be a small fire district, a small municipality, a water district, a school district with us. It doesn't matter. The program allows you super low cost if that's what you're inclined to do, or full service and a high touch service model.
So the program is basically a co-op.
It's a co-op.
It's a government co-op.
Correct.
And because of that, because of the government, because of the pooling that was done by the association in the beginning to get the program off the ground, it has now become this national co-op, and it's now a national program. Right.
And part of the infrastructure of what the co-op does is, whether you're a small unit of government or a large unit of government, everyone gets the same pricing and service model. And in our 24 years of doing this, our pricing has come down 7 times. And as we've grown in size, we've been able to go get concessions from our vendors, whether it's our record keeper, whether it's the funds that we have, we're getting better pricing. And unlike AT&T or Comcast, where you got to consistently beg for better pricing, when we get a price discount, when we get a reduction in our pricing, we pass it along to everybody.
Well, that's excellent. Now, on the trust side, on the medical trust side, my understanding is that program, because it is uniquely tailored to the municipalities, correct?
Correct.
So, I mean, and because that can't be a one size fits all. Everybody's got a different situation or a different design in that program. Do you mainly work then with the unions on that program?
It's probably 60% of the time, 65% of the time we're brought in on the union side. And so you've got the fire and police officers who, let's focus on Illinois Tier 1, they can walk out at 50. Let's say on average you walk out at 55. They're understanding that to get from 55 to 65, they need about $300,000 of after-tax money. That's what it's going to cost them. So it's driven on the labor side primarily. And then what we're looking to do is align benefits and compensation. Because what we're finding our benefit structure is that somebody accumulates all these sick days, they end up losing them as they walk out the door. Well, there's more efficient ways to do it, and that money can be converted into tax-exempt money that somebody can take. And we've had experiences, Jim, where it was the labor that brought us in, they couldn't figure out how to get the thing structured, and then the village administrator, the city manager goes, this is the coolest thing ever. We end up with a department head plan on the administrative side.
I've seen that many times. Yeah, that is a unique thing once their eyes are open to how good the structure is for the city and for their employees, because it is a competition now within the cities to try to retain employees, but to get new employees. And these types of benefit programs actually help to get these people to come to their community and say, I want to work for that community. They have a good benefit structure, and I know my future is pretty well set. Yeah. So
we had a great meeting yesterday with a fire district board, and the chief is pretty forward leaning in his thinking, and he's in a district surrounded by other districts where he's fighting for every candidate. And so part of the recruiting process is they're already talking about retirement before someone's even hired. And it changes the paradigm because they've got the deferred comp plan. You're going to get advice and guidance. We're going to talk about Roth and pre-tax. And then we've got the retirement healthcare funding plan. That we're already getting you set up so when you've satisfied your career and you're ready to retire, you're not stuck here because you didn't plan. We're doing that planning up front for you.
So have you noticed these new participants are much more informed?
Absolutely.
They're much more, because when I started on the job, the only thing you could think of is overtime, promotion, And down the road, you didn't really think about the pension. That was on autopilot, and you didn't think about any of these deferred comp things at all. Matter of fact, none of us thought about them until like in the 90s. It wasn't thought about at all. And a lot of times the cities didn't offer the benefit, and then after it was offered out there, it just it was like a learning curve.
Correct.
And so you're seeing a generational change where these participants are much more informed about what they need to have and what they should have.
Correct. And it's really a combination of a couple of things. It's frankly the old gray hairs that take the young kid by the ear and go, hey, you need to get going. And they're already attuned to that. They value their downtime differently than I'm 60. All I wanted was to work. And there's a different thought process with today's new employees. And so they're already thinking about, okay, I should be putting some money away. Maybe I'll do a little less in my DraftKings account, whatever it may happen to be, that they're focused long term. It's a little bit different of a story.
And that's excellent. And I think that type of situation is good nationally because obviously we want people to be better prepared. That was another goal of this program, was to have our participants be better prepared, have the tools when they retire so that they had a good retirement, a safe retirement, because that was always our focus within this organization and within NPPFA Benefits. That's the main focus. Have a good retirement. Don't be struggling, because that was what we saw. We have a lot of sad stories out there, and we won't go into them, but we know about them, about people who just didn't plan.
Correct.
People who put themselves in a bad situation and didn't, or had an employer that didn't offer those benefits.
Correct.
And that was also a situation. So anything else you would like to say before we close out our segment today?
No, I just think that what the co-op has allowed is, whether you're a small, medium, or large unit of government, it's giving you oversight and compliance. It's allowing an education structure that allows people to start accumulating wealth for retirement, because ideally you don't want an elderly, someone that should have walked out the door and they failed to plan. And the co-op is providing that level of education to allow people to hopefully have the retirements that they've earned.
Well, thank you, Joel, and I'd like to thank you for joining us here today with this segment of IPPFA TV. And for other segments, you'll be watching here on a regular basis with IPPFA TV. We'll be doing ongoing interviews with individuals. If you'd like to know more about this plan, the NPPFA plan, you can contact Joel Babbitt at, go ahead, Joel.
773-427-2060.
You can also reach him through email. He has an email address, and if you would give him that one.
Absolutely. It's joelb, JOELB, at NPPFAbenefits.org.
Again, thank you for your time, and for our audience out there, thank you for listening. Good day.